Hi there traders, and welcome to the Forex Zone from FX Explained, and we're now going to take a look at foreign exchange markets. We're going to take a look at the euro, the pound, the Canadian, Australian and New Zealand dollars, and also the yen, all against the US dollar, all the spot FX rates, and we're going to be looking at them in the wake of what we're seeing in here as a relatively dovish tone. The big theme for the last week has been the more dovish tone in here from Federal Reserve Chairman Jerome Powell in his testimonies that he's given to the Congress in the US, and that more dovish tone, a more dovish path for the Fed confirmed, and that has then seen the US dollar weaken. So most currency in here rallying, advancing, going higher against the US dollar, a weakening of the US dollar. So let's take a run through of what's going on in these major pairs in here. So here's the rally in the euro. Because of that more dovish tone, it reversed this downtrend line. Importantly, we held above this key low in here from June at 111.80. We rebounded from 111.92. We'd already rebounded from there. Then we got the more dovish tone. The market then surging back higher. It's just been stopped up here by this resistance area from earlier in July around 112.86 to 112.95, but holding support at 112.44, 112.41. And whilst above this support, we see risk higher for a challenge to 112.86.95 and potentially higher for today and certainly going into next week, into the middle of July. Let's take a look at the pound versus the dollar in here. Again, not quite as strong as the euro, but nevertheless reversing the downtrend line from the beginning of July. Again, driven by US dollar weakness, just stalling ahead of this resistance area at 125.81 to 125.88. But we do see risk in here of a push up through there. And if we get a break above through this resistance level, then the markets could certainly push notably higher. Let's move on to take a look at the US dollar versus the Canadian dollar next in here. A more bearish tone, starting to look at these a more aggressive sometimes risk currencies. So not only is the dollar weakening in here for against the Canadian dollar, we also had the Bank of Canada interest rate decision unchanged, dovish, but not as dovish as Fed. So dollar weakening versus the Canadian dollar, US dollar weakening against Canadian dollar. But what we have to remember here as well, you get the Canadian dollar strengthening, oil stays strong in here. And we're in that global risk on mode. Remember, equities hitting new record highs in the US. So we're seeing a risk on mode. So the risk currencies, Canadian dollar, Australian dollar, New Zealand dollar, all doing well. Oil higher as well, helping the Canadian dollar to strengthen. So that's dollar CAD lower in here. Moving on to the Antipodean currencies, Australia and New Zealand. Strong rally again, partly to do with US dollar weakness, but also to do with Australian dollar strength. And that's because of the strength in the Australian dollar, because of this risk on mode, okay? The market's in risk on mode, pushing higher in here, strengthen the Aussie dollar against the US dollar, weaker US dollar. Again, the market rebounding from ahead of this important 69.01 support, coming off of 69.07, pushing up through the trend line, aiming higher, 69.99, 70.17 today, maybe up to this important high at 70.48. For the Kiwi dollar, similar outlook in here, again reversing the trend line. We did briefly dip below 65.92, which saw the market in here go back to more of a range theme. But we do see upside risk. The market maybe today up through 68.89.94, 67.20, 67.29 is going to be key on the upside to re-energize a bigger intermediate term bullish tone. So all of these currencies positive against the US dollar in here, Aussie, Kiwi, CAD particularly, but even Euro and the pound. Finally, we go to dollar yen in here, more erratic. We did get the initial sell-off in the dollar again in here. The dollar has rebounded against the yen, but then this still looks like a small topping pattern. We did reverse the downtrend line, and for me, in the very short term for the day, we see downside risk in here. So aiming back lower towards 107.83 with 107.50, the critical level in here. So in here, aiming maybe down back towards that level. Only through here sees a more bearish tone. In here, we see a range theme now between 109.92 and 107.50, with the market having pushed above this key barrier here for a bottoming pattern. So intermediate term, we see a range, 109.92 from here to here, 107.50. In the very short term, I think the risk remains slightly lower for dollar weakness. Okay, this has been Steve Miley in the Forex Zone. Have a great trading day. So traders, don't forget to catch us again on the Forex Zone, and also check out all the great content on fxexplain.co.uk.